Hi, I want to thank everyone for taking a minute to listen to this update. I'm Shelley Johnson and bringing you a tax tip and a little bit of other information that we have on the various SBA programs. This changes by the day, so we'll give you the latest that we've come across. I do want to encourage you, if you have questions, please go ahead and put those in the Q&A box, and Deanna and I will certainly attempt to monitor those and answer those. So I am going to turn my video off just to preserve on bandwidth, but certainly wanted to welcome everyone and encourage you to ask your questions. So here we go. Let's turn this part off. Okay. So coronavirus is quickly changing the way we live, how we work, how we shop, how we socialize. And at this point, we obviously don't know exactly how long it's going to last or even how deep the damage is going to be. One day, things will be more normal, although I do think it's going to change some ways that we do business forever going forward. But in the meantime, I wanted to share a little known tax break that can help if you have employees and help them adapt to the current stay-at-home work environment. So we'll go over this unique tax break, and then I'll touch a little bit on some current updates with the SBA programs. And again, I encourage everyone to put any questions in the Q&A box. So buried in Code Section 139 is where you'll find this little opportunity to help ease the pain a little bit for your employees who suddenly find themselves working from home. Now, I will remind you that this is cash out of your business account. It is an expense for you. It is not taxable income to the employee, but it is still something that's going to chew up some of your cash during this critical time. So I just wanted to remind you of that, and I'll probably bring that up again a couple of times. So back to Code Section 139, because I'm sure everybody's digging into their code section book that's right on your desk to follow along. But this section states that gross income does not include any amount received by an individual as a qualified disaster relief payment. It's a long phrase. The law goes on to define those payments to include amounts paid or reimbursed for reasonable and necessary personal, family, living, or funeral expenses incurred as a result of a qualified disaster. President Trump has already issued an emergency declaration under the Robert T. Stafford Disaster Relief and Emergency Assistance Act that makes the coronavirus a qualified disaster under the law, at least through the end of this year, through December 31st, 2020. So what does that mean for you and your employees? Essentially, it lets you reimburse them for expenses they incur as a result of the pandemic. Those reimbursements are deductible to you as ordinary and necessary business expenses, which is the Code Section 162 category. And here's the key, non-taxable to the employee under Code Section 139. So Section 139 does not include regular compensation for the work they perform. That remains taxable as always. It doesn't include payments that are intended to compensate them for lost income, like paid sick leave or family medical leave. Those payments are still taxable as well. And it doesn't include payments that will be reimbursed by insurance. So if by chance you have a third-party sick pay insurance arrangement, it would not cover those. So just to reiterate, it does not cover normal wage type payments. So what's left? The biggest benefits will include payments for cost of working at home during the crisis. So that's computers, printers, supplies, and even higher utilities. So for example, if you're sending your team home with equipment and you normally would pay for that equipment, it's really not a change from that standpoint. You know, that extra cable would have been a business expense anyway. But as we're going into warmer weather, you know, if they're going to be home 8 to 5, they may have a higher utility bill because of needing to run the air conditioning and things more than they normally would. So if you wanted to give them some extra to cover that type of an expense, you could. It's a deduction to you for taxes, not income to them. Some other things that it can also cover would be the cost of daycare for family members staying at home that free up employees to work. So, you know, maybe there's an older sibling that they end up paying a little bit to take care of a younger sibling, something like that. So anything that helps enable your employees to continue their work from home. Section 139 also includes payments for unreimbursed medical expenses, over-the-counter medications, hand sanitizer, and cleaning supplies. So things that normally might have been technically in the black and white of the tax code, a taxable fringe benefit, had you given them more than a nominal amount of cleaning supplies or hand sanitizer, well, this is saying that it's okay to do that and have that be a business expense and not taxable to the employee. This may be the broadest and the most flexible code section ever written. It applies to any individual receiving payments. There's no age limit. There's no length of service requirement. Nothing to do with non-discrimination rules or any carve-outs for those of you that are business owners. You know, a lot of times for S-Corp owners in the greater than 2% range, some things don't apply as far as deductions and benefits. So if you find yourself as the business owner working from home more and incurring unusual, non-normally business-related expenses, the business can reimburse you for those expenses. I know if I'm going to be working from home later this summer, it's going to be cool and comfortable, not like it normally is when it's only the cats home during the day in the summertime. There are no deadlines for establishing a plan, no benefit limits, no required reports to submit to the IRS. There's no schedule qualified disaster relief payment, QDRP, in the tax code. So what else do you need to know about this in order to make it work for your business? At this point, there doesn't appear to be any statutory or regulatory requirements for documenting these expenses or making the actual payment. According to Revenue Ruling 2012-13, which related to a flood victim scenario, that revenue ruling stated that given the extraordinary circumstances surrounding a qualified disaster, it is anticipated that individuals will not be required to account for actual expenses in order to qualify for Section 139 exclusion, provided the amount of the payments can be reasonably expected to be commensurate with the expenses incurred. So what does that mean? Well, having said that, we suggest you establish a separate category in your profit and loss for payments and keep separate detailed records of who gets paid for what. Now, if you're working with us with QuickBooks Online, we have already established a COVID-related expense category. If you go down this route, we may want to make that a sub-account under there just to have a little bit more definition on tracking this going forward. A little good faith effort should go a long way here. It's hard to imagine the IRS taking a hard line in the absence of clear evidence of abuse. This strategy is not going to save your employees a lot of tax, but that's not the point. The goal of the law is to make it just a little bit easier for you and your employees to keep working while the crisis rages on. And the goal of using the law is for you to show your employees you're willing to proactively step in and do everything you can to ease their burden and helping you manage your business through the crisis. So take advantage of this opportunity. That's why it's there. And again, you know, if you've got questions on specific pieces of this, please feel free to put your questions there in the chat box. So I mentioned that I would also chat a little bit about the update with the various SBA programs. So the hot topic right now is primarily the payroll protection plan. The bank started accepting applications earlier this week. I was on a chat call yesterday with about 50 other tax strategists, and small percentages of us are starting to see those loans be considered accepted, a very small percentage being funded. So we hope to continue to see some movement in that area here over the next couple of days. The PPP loans are scheduled to the application period to go through June 30th. However, there's a lot of question about the funding and how much funding will be available. And it's the same program regardless of whether you're applying in banks or applying in SBA preferred lenders. However, there are formulas that banks have on what they can loan, and so that's why you may hear stories about this bank ran out or this bank stopped taking applications. So it's just a little bit of a juggle. There are banks out there who will work with non-customers, and there's preferred lenders who will certainly work with non-customers. The economic incentive disaster loan, that is actually scheduled to run through December of this year. So you've got a little bit longer time if you feel like that's going to be a better situation for you. We've talked a lot about these loans in some of the other webinars we've done, so feel free to go back and listen to those or schedule an individual time if you want to dig into the details a little bit more. Now, one thing that did pop up just this morning when I was looking through updates, one of the district SBA offices had put out an update, and they referenced that the EIDL loan, which we thought was going to be $10,000 off the top, is actually tied to headcount of employees. I'll be honest with you, I searched around and tried to find another reference on the general SBA website and was not able to find anything specific to that. So that may or may not be totally accurate, but I wanted to put that out there just in case someone would get surprised and not have as much funding as they thought they were going to. So again, I mentioned this a little bit, the payroll protection plan. Everybody's waiting to actually see the money. The banks are starting to accept the applications. They prefer working with their existing customers first. Was working with a client yesterday and actually was able to see, I take it back, it was Tuesday, was actually able to see their process go fairly far through on the Chase website. I know around here, Regions has been accepting applications, like City Bank, had some activity with Key, but again, have not actually seen any of those be funded yet. If your bank's not an option, we can give you some referrals to ones that we know are considering working with non-clients, or links to some options for preferred SBA providers. Again, be kind to your bankers. You know, this stuff hit them really fast and they're trying to scramble and get all their pieces together as well. So again, reminder to drop in questions. We will be doing this again next week on Tuesday the 14th, 1 o'clock. And our topic then is going to focus a little bit around unemployment specific to Indiana. In general, we'll be able to talk about unemployment, and we'll probably touch a little bit on some of the payroll tax credits. So you'll have to stay tuned if you want a little additional information on that, or like I said, if it's a more pressing timeline, feel free to schedule a little bit of one-on-one time with us. So thank you, and wish everyone a nice spring day.